Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be doing our normal candle-by-candle analysis, but a couple different things here. First off, I'm a day late. Normally I record these on a Monday, but I'll be recording this one on a Tuesday. And then, of course, looking at what happened last week. Now, last week, again, I'm going to be going back to last week Monday, but this time around we're going to be analyzing Tuesday to figure out what happened. Now, when we look back at what took place last week, there's a lot that happened, right? I haven't erased anything. I've left these on there since the last time around. So looking at what all took place and analyzing here and breaking this down drawing by drawing. So first off, the one thing that we were looking at was the market bouncing off of the lows and rotating back up. But we were talking about how the market needed to go up first, then pull back for the continuation phase to the upside. Well, it did go up first and then pull back, but it did it quite a bit higher up. Before we get into that one, this creates a scenario where the buyers were able to buy in, and again, it's there as well as here and here, and that creates a nice little zone of interest that led into their upside objectives. Their upside objectives being this first target and the second target to the upside based off of these two entries. Now, the other thing that we were looking at was a possibility of a short back to the downside, and the short back to the downside was a very wide-ranged short with an entry here and a stop above the highs. And it did work, and it worked its way all the way down to the target area. It did succeed in what it was supposed to do, but this is a great example of what a high probability trade can look like. It's high probability because your stop is so far away, right? So in this case, we had to use a lot of it in order for it to work its way back down, but it did complete the objective. Now, on the way back down, we were also talking about the market looking for sellers' opportunities to short along with this continued, albeit wide-ranged trend to the downside. Low probability sellers, but really small stop versus their target, which was also filled. So overall, I mean, everything worked out really, really well. It's just kind of funky in the way that it bounced around, especially for the scalpers. Beautiful price action in and of a whole, though. Really nice. So moving forward and taking a look at what's going on for today, get rid of all this other stuff here. First off, the one thing that we have to see here is where are we, right? What has the market really accomplished? We started off with this monster of a gap to the downside, and that gap, well, it's still open. Side note, it's still there, hasn't been filled in. Filling it in would require prices to rally up here, which they haven't yet. But they did leave behind this really wide open gap back here, and that was finally filled back in. So as far as the overall back and forth movement, you know, is that what the market was looking to complete? Is that job done? And we have to look at this from the bottom to the top and see, inside of all of this movement, what did the overall volume look like within that? And the majority of that volume took place on the lows down there at 42.80, which kicked the market back up. After we had that little inside gap, there was a little bit of volume going back and forth, but really it didn't accomplish a whole lot. And if we go from the top all the way down to where we are today, creating that bottom, this will give us an idea of kind of what's going on. And really, I think this kind of paints a fairly obvious picture. The bulls, with this gap up, were looking for a continuation. And, well, all of their orders stacked up in the assumption that it was going to continue. And then it didn't. So one of the big things that stands out here is that the bulls were looking for a continuation phase back to the upside, and it just totally didn't work. If the market wants to come back, then a lot of those longs are going to be looking to jump ship. This could be in a couple different ways. Their stops will be above the highs, but there are a few different ways to look at this. First off, you have the scalper's mentality, which would be a bounce off of this area and a quick rejection back down. But given the location, this looks like there should be a lot more room than just a scalp. So I'm sure there will be scalp objectives as first targets, but if we extend this out a little bit further, and I'm just going to modify it off screen so I can see the chart. This is a 2-to-1. That puts the target just underneath the lows. So the problem is already fairly obvious in that if we were to enter here for a 2-to-1, it doesn't fit. This is a non-optimized entry. This doesn't really work to our benefit. So in order to get this to really operationally look good and sit in a place of interest that gives us good risk reward, we should look for an entry a bit further up around the 43.97s. The stop still being, of course, above the highs. Now, if sellers are looking for an even better reward versus their risk, then they're going to be looking for a 3-to-1, and chances are, I bet that fits pretty nice right up by those swings. Yep. And this gives us a really, really nice area to try to push the market back down again. Let's get up off of those highs. There we go. As a zone of interest. So the resistance zone does start at the POC for the sellers to take over, but that's more for the scalp side. Swing sellers are going to be looking for slightly more favorable pricing to attempt to rotate the market back down again, with the assumption that these bulls are stuck and they're just hoping that we get the bounce back up for break-evens. Now, let's say we don't get the bounce back up for break-evens, and the market just continues back to the downside. There will be a very nice zone of interest that was building in around the 4280s, but it is to be noted that it is incredibly small risk, which means that the probability is very small, and that also means that the reward is very high. This is a 3-to-1, and I mean, realistically, we don't have a whole lot of price action yet to determine. I'm sure there'll be one more little high inside of there. That means that if we were to go all the way back up to the highs, that fits, what, a 5-to-1? Oh, more than that. You'd probably get a 7-to-1 inside of here. Yeah, 7, I mean, you might even be able to get a 9-to-1 inside of here. What I'm getting at is that the bulls have an incredible potential, low probability, monstrous reward versus risk scenario way down at the bottom. But if we're looking at where we are currently and we zoom in on what's going on, we can see that there's a lot of confusion. We started off with a really, really strong drive to the downside, heavy bear shelling, inside gap up, the sellers followed through, but when the sellers hit the lows again, everything just kind of stopped. The sellers all just, they kind of gave up. There was some candle gapping inside of there, looked really good to the downside, and then it all filled in. Now, this did end up being a washout, and the sellers rotated it back down, but even then, we still couldn't break down to a new low. From that point, the market's just been kind of going a little bit sideways and not doing much, but we can see the barrier. It's very obvious that the market is having an incredibly difficult time breaking underneath this low. And with this amount of failure on the underside and now coming back and twin reversing off the same spot, this is a potential area where, you know, the bulls may want to come in, but if the bulls lose their grip, this would be the launching point for that rotation down. Now, it's really far down here, so if that's the case, we would have to assume that you would be playing the part of the scalper. And the part of a scalper would be a lot smaller target. I say smaller target, we're still talking huge distances here. But the risk is significantly larger. And another way to look at this would be, well, we're just kind of sideways. Not really a whole lot has changed. And if we're looking at the overall back and forth momentum, I don't honestly know that we need to change anything about the areas that we've already marked up. Structurally speaking, everything lines up beautifully in the areas that that they should, really. And if we are looking at this from a bullish continuation stance, from a cycle standpoint, right? We've got wave 1, wave 2, wave 3, nice, wave 4, oh yeah, now it's starting to, oh, wait a minute. Now that doesn't mean that the market can't rotate back to the upside, like we've been talking about. But when we've collapsed down a little bit further than a lot of traders necessarily wanted to, that usually leaves them back, left holding bags and stuck. And when the market gives them an opportunity to come back up and get out, that's going to be the area that becomes a lot more interesting. As far as dip buyers are concerned, it doesn't feel like this is an opportune spot to be a buyer yet, which means that we're just going to have to wait for deeper price action. And regardless of whether or not we're looking farther out or closer in, the price action that we're getting right now doesn't really give us any clues other than we're still consolidated, we're very range bound, and even if we were to take the entirety of the day so far and look at what's been going on, the volume is basically right in the middle. So we know that we're in a balance. The market is coiled up, springed up, and trying to get going. It's just a matter of who is in control. So as far as the current market position, it's likely going to keep trying to go to the downside. That's what would fit at least. But, you know, that said, how much room to the downside is there? Is it going to go all the way down to 42.80 quarter in one shot? I'm not necessarily anticipating that. I'm more anticipating something along the lines of this. Right? It's going to take a little bit more time. And it might not be one big swoop like that either. But I'm not necessarily looking for this breakdown to last very long before allowing these bulls to get out of the way. From there, we can see what they want to do, but the overall structure is relatively solid in that we are right in the middle of a range. We've just got to wait for a bit more price action now to tell us, well, not really tell us, we're already knowing what directions we're looking for. We just have to wait for the market to get there now, and that might take a little while. This is where patience becomes a virtue. But that's going to do it for this one. I know it's a Tuesday instead of a Monday, a little bit funky and weird, but outside of that, relatively straightforward this time around. Last week went really, really well. Let's see how we can do this time. We're coming in a little bit later in the week. There's nothing happening today, so fingers crossed we at least move a little bit. Jeez, give us something to talk about next week. But either way, as always, if you missed anything, if I missed anything along the way, or if you have any questions that you want to drop in, feel free to put those in the comments below. Or you can, if they're a little more detailed, you can always shoot me an email, jhb@ssftg.com. Until the next one, enjoy, rest up, and we will see you all then. Thanks.